Hello, everyone, and welcome to Virtual FinTech Fair 2020. Today, we have a very exciting panel talking to you about DCEP, eRMB as Libra, and the impact it's going to have on payments and central bank currencies. My name is Musheer Ahmed. I'm co-founder of the Virtual FinTech through my company, FinStep Asia. I'm also co-founder of the FinTech Association of Hong Kong, where I'm a board of director now. Right. With us today is a very esteemed panel, and I will get them to give a short introduction about themselves as we move further towards the discussion. So let's start with Ms. Tanvi Ratna from Policy 4.0 to tell us a little bit more about herself. Tanvi?
Yeah, thanks, Musheer. Thanks for having me on this panel. So Policy 4.0 is a fairly new organization and unique organization in the space. So we look more at the policy and regulatory aspects of this new blockchain infrastructure, whether it's CBDCs or it's global crypto payments. And I come from that background of working in policy. I worked with Prime Minister Modi, and I was last blockchain lead at EY.
Sorry, I was on mute. Novice mistake on virtual panel while running one. Next up, we have Mr. John Ho, who is Head of Legal for Financial Markets at Standard Chartered, based in Singapore. John, would you like to just give a brief introduction and what you've been looking at in the space, please?
Yep. Hi, thanks, Musheer, for inviting me. Hi, everyone. My name is John Ho. I look after financial markets globally, and also in very much involved in a lot of the fintech and projects initiative, not just on behalf of my organization, but also with respect to a lot of the external activities in the context of payments, in the context of tokenization, and in the context of looking at the regulatory space in this area relating to blockchain, tokenization, digital currencies, and central bank digital currencies. Thank you.
Great. Thank you so much, John. Now, bringing into picture Michael Sung, who is co-director of the Fudan Fanhai FinTech Research Center in the Fudan University. He is also a well-known expert in the fintech space based here, but also working quite closely in Hong Kong. Michael, would you like to give us a brief introduction?
Yeah, so at the sort of Fudan Fanhai FinTech Research Center, we're focused a lot on bridging international blockchain and digital finance innovation into the Greater China ecosystem. So we're working quite a bit to take the best practices, the technologies, the use cases, the business model innovation, and apply it to things like digital asset securitization. We have very strong fundamental basis in traditional finance, and is now trying to segue these sort of new techniques in digital finance and digital assetization and applying it to traditional finance. And we also give a lot of policy recommendations to, with regard to things like the digital RMB to fintech policy, taking the best practices from internationally as well.
Thank you, Michael. Last but definitely not the least, we have Mr. Massimo. I'm going to struggle to pronounce your name, but I'm going to give it a go. Massimo Buonomo, if that was right.
Yes.
Who is a UN global expert in blockchain, cryptocurrency, fintech, and regtech. He's also a global advisory board of the Global Impact FinTech Factors and board members. Massimo, would you like to please give us a brief introduction about yourself before we get into the discussion, please?
Yes, as you said, I'm a United Nations Alliance of Civilization global expert on blockchain, cryptocurrencies, regtech, fintech. I advise international international organizations, governments, corporates that want to increase their presence in the blockchain space. And I try to explain things that seems difficult in an easy way. That's probably one of my best strengths.
Great, thank you all for your wonderful introduction. Now look, when we are talking about cryptocurrencies, central bank digital currencies and the whole topic, it all boils down to the origination in some sense the first major use case of DLT in financial services, which was Bitcoin, right? From the time we have had the introduction of Bitcoin, a lot of things have changed. This part of the world, in terms of Asia, especially Hong Kong, mainland China, etc., quite a few people were actively involved in Bitcoin mining, and there has been this big move from there. Now, Michael, I'm going to bring you in because you've been here, you've seen that progress as well. So how do you see now this change from, and to bring the slightly higher level perspective of the focus moving away from the peer-to-peer nature of Bitcoin to more applications in the payment world when it comes to DLT and blockchain?
Yeah, I think we certainly see an evolution. My perspective is this: when Bitcoin came about, it was such a revolutionary concept by Satoshi to be able to use technology to get into this completely decentralized world, right? So there's a lot of, I would say, giddiness and enthusiasm and idealism in the idea of a decentralized future where we can decentralize all these central organizations, we can disrupt government, we don't need banks, we don't need monopolies anymore, we can go to a completely peer-to-peer, trustless environment and still conduct the same type of business and economic activity. It turns out that that hasn't come to fruition, right? Because, I view sort of full decentralization akin to communism. It's actually good in theory, but in practice, because of a lot of the incentives and dynamics, and it's a hard thing to get right. So I think the answer is somewhere in the middle, meaning certainly we can use some level of decentralization so that we can get to a better state in terms of incentives and dynamics and things like that. But we still need a little bit of structure in there, governance, for example, regulation perhaps, to prevent bad behavior, so that the world can still function in an optimized way. So I think that's where what we're seeing. We're seeing, we kind of ping-ponged from full centralization to decentralization, and now we're kind of getting into this sort of hybrid middle state where I think is a little bit more optimized. And in that hybrid middle state, we have the ability to actually now finally interface with traditional finance, interface with governments, interface with institutions. And so all of that is happening right now. It's very exciting, right? The technology is maturing, the regulation pretty much around the world is maturing, even in China. And so now we have, I think, this next phase of innovation where there'll be massive institutional adoption of these technologies and use cases. And of course, payments, remittance, and digital currencies is one of the major pillars of that.
Just in that, right? When we're talking about the applications and purely looking at that split between blockchain versus crypto or CBDCs going in, we have the BSN network that's been set up, right? So maybe if you can shed a little bit of light, you've been very actively involved in that project, or have been looking at it closely from close quarters. Maybe we can hear a little bit more from you about how that's come about and what role it's playing outside of the CBDC world, in the payments world.
Are you talking to me?
Yeah. Just asking to build up on that with regards to BSN.
Yeah. So I think there's two parts of it. I mean, back when Xi Jinping announced a bunch of news at the fourth plenary sessions, there are two major announcements. One was the digital RMB, right, what we call the DCEP, and that got the lion's share of the news in the marketplace. But the second, which is very complementary, also very important, it was the blockchain focus, right? So there's now a national push to create the infrastructure of infrastructures that allows heterogeneous data systems, IT systems, be able to intercommunicate with each other. That's very important, for example, in China, where blockchain has been thriving, as a technology, but it's sort of like let 10,000 flowers bloom. Like Ant Financial's doing their own chain, Baidu's doing their own super chain. So there's this whole ecosystem, and these different ecosystems are siloed; they don't talk to each other, right? So there should be sort of a base layer interoperability framework to be able to connect all these chains together. You see that in the West also in the form of like Cosmos and Polkadot, right? So I think the first level is everybody's trying to create their own infrastructure that matters, but there's different use cases and different focuses. And the next phase will be to connect that all together into a unifying next generation internet. And that's how the original internet formed in the beginning. Like back in the early 90s, all the corporates didn't really believe in the internet and they thought it was too free and it was too scary. So they created their own private intranets, and eventually these intranets started to interconnect with each other, and that has formed the modern internet. So likewise, this will happen, I think, in the next phase of development for blockchain. And so there's this thing called the BSN, the blockchain-based service network, and China, I think, is credibly going to drive massive institutional enterprise adoption of blockchain. Because they're a centralized government, they can actually mandate the entire country to move in that direction. And you see that right now. So BSN has already been commercially deployed in late April. There's over 135 city nodes in the country, soon to be 200 by the end of the year. And now, of course, that also will form the sort of backbone of the digital Silk Road internationally. So because of that institutional adoption, I think it's going to drive institutional adoption worldwide. And I think there's a very strong opportunity for BSN to become a sort of global interoperability standard, connecting both the mainland to the international ecosystem. And I think a final point, if I may, is that in order to have a unified global ecosystem, it needs to, this interoperability network has to be able to connect to public chains, right? Permissionless chains, things like Ethereum and Tezos and EOS, and et cetera. On the mainland, that is not really supported by the government. They want to focus on what we call permissioned private blockchains, right? So recently, the BSN has also, split in terms of governance. There's going to be a mainland version of BSN, which will be subject to the regulations and oversight of the central government. But the international version, the BSN International, which was just recently announced, will be free to interoperate with all the public chains in the world, also have its own independent governance. And I think that will be a very strong benefit to the world. So now we'll have a global connectivity to allow different ecosystems to interoperate.
Thanks, that's quite insightful and quite deep on that. And Tanvi, you've been also looking at from policy framework as well as infrastructure framework on how DLT has been integrated. We spoke about BSN. What are your thoughts when it comes to BSN and the technical infrastructure being built for it, and how other countries could potentially use the same to build out their regulatory initiatives overseas, the ones who haven't started or are still early in the process?
Yeah, so I would fully agree with Michael in terms of, as you put it very well, there is this problem in blockchain of 10,000 flowers blooming, right? And the biggest bottleneck to any scaling or adoption has always been this. It's very challenging to set up networks. It's very challenging to scale networks and to work with other networks, right? Which are being set up with other institutions. So I think the BSN is definitely revolutionary in that way. And it is a global framework, right? Because like he said, it's basically a set of SDKs, and it's a sort of a messaging protocol, you can say, similar to Cosmos. So it sets up interoperability globally. That forms the sort of blockchain network layer, right? And the DCEP coming in becomes sort of like the token, which can move, it has its own network that it moves over. It has its own programmability as well, but it can very much be integrated with this global interoperable blockchain network that's coming in. And that has just many, many implications. I mean, from everything from Swift and Ripple right down to, what's happening internally in the country in terms of how a data layer gets managed, right, across different services. And we recently saw out of Beijing this whole proposal of a programmable government, programmable society, right, and a whole sort of unified data infrastructure in the city. And that kind of thinking itself is very forward, and I think, you know, China with their infrastructure has built sort of the whole stack for blockchain, right? It's not just the digital currency, it's not just CBDC, it is a full stack kind of approach, which is very ahead compared to, you know, where the rest of the world is and where thinking is in other countries.
I think we lost you for the last part, Tanvi, very short period. Well, I'm moving on to the, you know, taking this forward. We've now seen networks being built up, governments, etc., working on things. One of the earlier projects that any regulators have been working on in the region has been Project Ubin, right? John, you've been in Singapore, have had close look at that interaction possibly as well with that when it came to Ubin. And so I wanted to bring in your perspective on the regulatory frameworks being built around projects like Project Ubin, right? And the progress you've seen in Ubin, and if you would like to highlight a few others in the region or even globally that play into the payments network with a regulatory oversight and regulatory involvement.
Sure. I think as some of you might be aware, Project Ubin has gone through many phases. I think the last was most recently a report that was published by the MAS and together with the Temasek jointly on the successful conclusion of their fifth and final phase of the Project Ubin. So this is initially where they look at proof of concepts in terms of trying to address payment networks, trying to look at you know, how to enable you know, cross-currency exchange, also to demonstrate the clear value and the use of blockchain technology. So so the Ubin 5 is a combination of all the different series and obviously looking at lessons learned. And in a nutshell, what the Ubin 5 has shown is they could have a successful development of a domestic multi-currency payment network prototype. And back to the point earlier that was mentioned by both speakers, it's about addressing the immediate business needs on cross-currency and foreign exchange transactions. And I think as we note, you know, with stored value facility, domestic payment, you know, it's mobile payment, that's fast. But when we are trying to solve the problem statement with cross-currency, high-value payment, that remains still a friction point, as parties might be aware. And then this Project Ubin shows that an international settlement network model after the lessons learned on the payment network prototype could enable a faster, cheaper transactions on a cross-border basis. So it also validate the use of smart contracts on a payment networks, because in the case of Ubin, they've looked at in earlier phases, delivery versus payment, settlement with assets and private exchanges. They also look at conditional payments. They also explore the atomicity and atomic swaps in the context of DLT. And I think more importantly also, they have also sought to determine the commercial viability and the value of blockchain network, and trying to foster a more inclusive ecosystem. As we note in this region, there's quite a number of people that are still considered unbanked and unbankable, given the fact that either they do not have access to technology, they don't have credit history, they don't have access to banking and financial services. So the sort of potential in terms of harnessing this is actually quite wide. And I think the issue now is ensuring that there's proper framework to also balance between enabling it and also provide financial inclusion, not trying to exclude parties who don't have access, and also looking at monetary policies. And last but not least is the governance and harmonization of cross-border framework that needs to apply on a cross-border basis.
And there's a lot of very interesting and important points. Like governance is going to play a very important role, but financial inclusion has always been one of the themes around blockchain and DLT. We've also seen it being used by UN in terms of using blockchain for digital identity for refugees to be able to access funding or use that as an identity element. And Massimo, I want to bring you in from two aspects. Right? One is building on this theme of how digital currencies could enable financial inclusion, firstly, and now bringing in the topic of Libra itself, right? How Libra could potentially enable that with with 2 billion plus users that Facebook has? And why does that need to be there when there is already elements of WhatsApp Pay in the regular context, which also Facebook owns? So would love to hear your perspective, firstly, on the financial inclusion element of DLT and CBDCs potentially. And secondly, the interplay of Libra and private currencies like Libra from social networks who have a significantly huge presence globally.
Yeah. Now, first of all, we have to understand the context in which Libra came out, because, of course, the goal of helping the unbanked and improving access is an important one, and the Libra might really make a difference. Now, people are looking at Libra because of its great potential, but there is a different story related to that. If we go back at the beginning when Libra came out, first of all, we know that Libra is a private stablecoin. The release of Libra has driven central banks to redouble their efforts to develop central bank digital currencies. But one of the most important officers in European central banks suggested that stablecoins have the greatest chance of replacing the dollar, and that is a very important point. And the possible impact of private stablecoins run by companies like Libra have an even greater impact because of their international network. Libra, in fact, has undoubtedly been a wake-up call for central banks to strengthen their efforts to improve existing payment systems. But, and this is a big point, Libra faces too much resistance from governments, because the criticisms are related to the fact that central banks could lose the ability to adjust monetary policy should stablecoins such as Libra become popular methods of payments. So what did Facebook do? At the beginning they came up with a white paper, but recently they came out with a new white paper and stating 4 main points. First of all, they are not offering only multi-currency coin, but single currency stable coins in addition to multi-currency coins. Then they are addressing the compliance issue, because they're saying that they are enhancing the safety of Libra payment system with a robust compliance framework. Then they are foregoing the future transition to a permissionless system, so they will still to the permission system, but they say while maintaining the key economic properties. We have to see how that works. But in fact, one of the most important things is that in the design of a Libra, there will be reserved that will back the single currency stable coins. So we've seen that Facebook Libra has changed its approach from a global currency to a one-to-one sovereign currency approach. And here we see that there is an enhanced compliance procedures to address concerns that the network could be used for money laundering and financing illicit activities. Also, there is a definition of how the reserves will be protected for the sovereign currency that Libra coins are issued against. And then there is, last but not least, the approach to abandon the move from a permission blockchain to a permissionless blockchain environment, such as Bitcoin or Ethereum. This is a move for Libra to address regulatory responsibilities on an ongoing basis. Now, one point that is quite interesting and a bit controversial, but I like to mention, is about Libra and WhatsApp. And in fact, it's not only about that, but more generally speaking, it's of some non-financial companies entering financial companies' environment. This problem might be related to Facebook, which with Libra allows international payments. Why? Because Facebook with Libra and WhatsApp and other non-financial players are effectively using financial players like Visa and the banking system to make payments. This is because they are not financial players, and therefore they do not have to respect the strict financial rules and the equity requirements the banks have to. So there is a need for regulation for non-financial companies entering the payment business. Why? Let's see it in practice. If I pay with a bank account, I instruct the bank to make the payment. If the bank doesn't do it, there are tons of law provisions which protect me. But that is not the case for payments via WhatsApp and Facebook. In those cases, if I instruct WhatsApp to take my money and make the payment to a third party, they take the money, but if they don't do it, I can only enter legal proceedings against them. But I do not enjoy the protection of using a financial company. That is why we need regulation for Facebook and WhatsApp and other non-financial players. In fact, let's see what happened, for instance, in Brazil related to WhatsApp. In Brazil, WhatsApp was called to do unfair competition because given the widespread adoption of the chat application throughout Brazil, officials fear that it will have an unfair advantage over other platforms. There are also concerns for data protection. Even then, João Manuel Pinho, which is who's the Financial System Organization and Resolution Director at Central Bank, said that WhatsApp was okay so long as tech companies behave themselves. That's an interesting definition. So as you see, there are lots of issues here that have to be clarified with a regulatory approach. And I believe that this is going to happen in an international environment with international institutions which have to step in and make strict rules for non-financial companies acting into the financial world.
Thank you. That was quite deep. And I think, yes, the governance, which John mentioned, you're also talking about it, rules when private bodies come in, the backing of having a central body, right? Which in some sense grains against the whole concept of DeFi or digital, decentralized finance, which a lot of the thoughts or the ethos of Bitcoin was. Tanvi, bringing you in now and moving towards, the digital yuan, right? And the eRMB project, which is now been, the pilots are ongoing, dozens of cities, and it looks like going live first very soon among all the major countries, right? So from a policy perspective and also borrowing in from what Massimo was talking about, how do you see this playing out? Is this just going to be about wholesale payments? Is it going to be something that you see, in a sense, replacing the renminbi usage and it's just be digital on a blockchain so that everything can be managed in a good way? How will that also impact a bit of the, the monetary policy by having central bank digital currencies?
Yeah, so that's a lot of questions rolled in one. So I would say, I mean, with the DCEP, so it is already retail by design, right? Because it is targeted to the end user. It's not, it's sort of a hybrid model of CBDC. And there are a lot of dimensions to it. So in terms of its design, it's very unique. It is sort of, blazed past a lot of dilemmas that, we are still seeing in CBDC discussions with other central banks, right? Like what will happen to deposits, how will it impact, for which part of money supply will it come into and all of this. So it has sort of already figured out mechanisms to, ensure that legacy players have a piece of the cake, and they are not disintermediated. I mean, there's a lot of very interesting things in terms of the model and design that they've built. In terms of its implications,
they are very...
Just
highlight a little bit on the model and design, like very quick examples of how they figured it out, high level way?
Well, I mean, so far our research is still under wraps. It will be out in about 2 weeks, and people can sign up for it on our website. But I am not really at liberty to disclose it till the report comes out. But in terms of the broad elements of it, I mean, they have actually integrated programmability at every level, right? Which is itself very unique for CBDCs. We don't see many countries experimenting with that aspect of a digital currency. They also have different payment rails, which they have integrated well with the existing payment rail. Like when you're talking about WhatsApp and Libra, I mean, WhatsApp is just a payment rail, right? Like the Libra wallet can basically integrate with a whole set of payment rails, and WhatsApp is one of them. But they have managed that. But the most interesting dimensions of the DCEP are in terms of its monetary policy, and they are in terms of what it means as a currency, right? So I think for each CBDC, the aim with which it's designed determines everything. That determines like the implications in every way, because your design choices are based on that. And in the case of DCEP, it's very well positioned for this currency war sort of dynamic, right? Which a lot of people are sort of looking into now. You know, and there was this economist story calling it a Bitcoin killer, but it might just be the dollar killer, right? Like that might be what it actually ends up doing, because it is creating a lot of competencies at a central bank level, which I don't think any other central bank has today or will have in the immediate future. And in terms of cross-border payment, there are different permutations and combinations possible with the BSN, with the DCEP's own wallet infrastructure, and with the DCEP working with existing, you know, SIPs, SWIFTs, the yuan clearing banks, and all these other mechanisms that are already existing. So it is just opening up this whole dimension of possibilities in terms of monetary policy, in terms of the banking system, in terms of capital markets, which I don't think other, we've not really gotten there yet in terms of other experiments in CBDC.
Great, thank you so much for that. John, bringing this into perspective, right now, once central banks are reshaping monetary policy as it were, right? There's a whole degree of not having to wait for a lot of data analytics to come in on the impact of monetary policy. You can fine tune that using the, you know, the blockchain, because you have a lot of data and control on what's happening and in terms of the flow. How are you seeing from a regulatory aspect, right, for the other central banks? How will this start impacting them? Secondly, the cross-border nature. How do you envisage the big central banks working together from a cross-border perspective? We've seen some attempts and projects such as Project Lion Rock between the Hong Kong MA and the Bank of Thailand. So how are you seeing this play out in the region and across Asia?
Sure, there are two questions to that. Let me take the first one. The first question, if I understand that correctly, is about, you know, what do central banks trying to achieve in looking at CBDCs? As you note, at its very core, the CBDCs, there are two types of hypotheses they're looking at. One is obviously the retail CBDCs, looking at enabling financial inclusion, micropayments, removing barriers to payments or transfers or e-remittances, whether it's costs, whether it's regulations, whether it's anti-competition practices or cartels. So you could see that there is that initiative being looked at from that. And obviously, a lot of the central banks now are grappling with some of the key fundamental policy thing. Is the attempt to achieve all that, or is the attempt is to enable retail to actually have a direct relationship, a direct account with central banks, because then they have to weigh the pros and cons between enabling that and also not trying to create inadvertently a financial disintermediation of the financial system. And then what will happen, you're crowding out, you know, the ability to raise funds among banks. So at its very core, the central banks are obviously tackling with those issues, because obviously it is a hot topic, it's topical, everyone is talking about CBDCs, but I want to go back to fundamentals. Is why are they doing it, and what they're trying to achieve. Now, so in terms of the retail CBDCs, there are a number of reasons, and some central banks have come out with openly to say that they are more focused on the other aspect, which is the wholesale CBDCs, primarily in the context of cross-border payment. Because right now, if you look at earlier, what Michael had mentioned, studies have shown that the cross-border payment right now, it costs on average 7 to 8%, depending on where you see it, that amount of money. So when you look at that against the $1 trillion that's been floating around in terms of remittances, that's a lot of money being dropped or cost in terms of moving monies around. So what the regulators want to do is to create a system, whether, if they can achieve interoperability within on a cross-border basis, to enable faster, cheaper, and a more resilient financial system to make payments. And I think that's key. From where we see, there is a BIS report that actually looked at a number of central banks. Out of, let's say, more than 80 central banks that have been surveyed, I would think the statistic approximately 66 of them in some form or fashion are either considering or piloting or looking at CBDCs in one form or shape. And the other thing that we see is a shift in mindset among the regulators. If you look back a year ago, 2 years ago, it's kind of hostile to the idea of even private stablecoins. It also did not want to entertain the idea that there's a problem to be fixed in the financial system, especially cross-border payment. But if you pivot to this year, what COVID have done is actually a couple of things. One, it has accelerated the digitization of the financial systems and payments. Two, there has been a huge mass adoption in terms of contactless digital payments and the like. And thirdly, there's a mindset shift among the regulators to say we need to prepare for the day that digital payments, contactless payments is there. As you would see, there's about 10 central banks this year that had to replace banknotes because of fears, concern about transmission of COVID via the handling of contaminated or tainted banknotes. So I think all these forces have actually resulted in a positive impact on the adoption of contactless payment, digital currencies, and also provide an impetus to the adoption of CBDCs. So I think that is obviously a positive steps.
Thanks a lot, John. Michael, coming to you now, like we've spoken about how we're seeing central bank currencies. There's this focus on also bridging wholesale payments by some of the central banks, but a lot of this focus has been local, right? Now, the question is, with the geopolitical situation not necessarily improving, the US-China trade war has been going on for a couple of years, seems to be continuing and not improving per se. There have been some leeway somewhere, but not anything major. How do you see that playing out in the future? How is this going to impact globalization? Are we going back to localization, and will different countries trust each other and will connect to these nodes, be it BSN or otherwise? How do you see that impact?
Yeah, I mean, certainly everybody understands that the geopolitical situation has not been more sensitive since the world wars, right? So I think that there is quite a bit of tension, and this is a cause for concern around the world. Now, what I think is a potential, thing that can help ameliorate this situation is these very things. Blockchain as a technology is all about enforcing trust and collaboration where none exists, right? So if we can create new frameworks for trade, for example, where both sides of the fence can actually get benefits, and we can leverage blockchain technologies to be able to provide that framework to be able to enforce that trust through smart contracts and things of that nature, then I think that's a force to pull the sides together apart. The second is on the aspect of trade, which is heavily facilitated by the CBDCs and digital currencies and digital assets, right? John quoted a very interesting figure, which is like cross-border payments on average cost 8%. That is for people who don't have access to traditional banking system. Okay, so you have to go to Western Union and or you have to use other sort of money transfer agents who reap a huge transaction cost. Certainly, central banks are paying less than that, right? So I think there's a disproportionate effect of the lack of viable options for money transfer, remittance, and cross-border payments, specifically with the most economically fragile. So if you look at the developing world, say in the APAC, right, we're talking 90% of the companies in each of these countries are SMEs, and they represent 50% over the overall GDP. And post-COVID, you know, with trade stops and, you know, the traditional sources. They don't have financial inclusion a lot of the times. They don't have bank accounts. They don't have access to the digital economy tools to be able to take advantage of, you know, everything that happens online, right? So by providing, you know, tools and infrastructure like the BSN with interoperability to give SMEs these digital economy tools to be able to go online, and then to be able to add things like trade finance, cross-border payments. I think that's a game changer, and I think COVID is in fact a major catalyst for that. And if you look at you know, organizations like the ICC, the International Chamber of Commerce, it was formed after the World Wars, primarily to increase trade as a way to avoid the next World War, right? And I think that thesis holds here. If we can find ways to economically integrate, leveraging technology and leveraging you know, new tools of you know, such as tokenization and digital assets, and we can find new frameworks to be able to get both sides to have a win-win situation, then I think we can defuse this geopolitical situation. So that's exactly what my research center is working on, is looking at new digital finance techniques in developing countries, where we can create financially structured, you know, opportunities where both sides of the fence, you know, the Western, you know, investment banks plus, you know, say Chinese infrastructure companies can go and build digital economy infrastructure in developing parts of the world to pull the future growth of that country up through enabling SMEs. So I think that is the future for how we can get out of this mess that we're in.
Thank you. Massimo, I'm going to come to you as we come towards the end of the panel. We've had some questions asked and they've been answered in the discussion. Excuse me. When we look at a unifying body as such, right, the United Nations covers a whole gamut of, you know, 190 plus countries, and it plays a very important role in international collaboration. Do you think, and this is more conceptual, is bodies like UN, etc., who are a bit more neutral, could become the institutions that could help in the cross-border nature of becoming, for lack of a better word, the custodian of cross-border CBDC interaction or driving this interaction? So what do you feel that bodies like UN can play in the central bank digital currency and cross-border networks?
Okay, well, of course, United Nations will play a very important role. In fact, if you look at some of the projects that have been pushed, even promoting the use of cryptocurrency with a project related to cryptocurrency fund. Now, when we go to technical standards, there are some international bodies that deal with that. The point that I was trying to make is that, of course, international organizations can address the issue of cross-border payment system, but the real issue is to come to grips to what's happening right now. If, for instance, you look at the SWIFT problem in China, this is a very interesting issue, because DCEP is conducive to promoting the internationalization of renminbi and reshaping the current cross-border payment system. Now, the problem, as we've seen in China, is that, for instance, the two companies that are promoting the cross-border payments are a cross-border interbank payment system that is the CIPS that is being done as developed in China. But the most important ones are CHIPS and SWIFT. Now, if you look at the companies, CHIPS is a US company, while SWIFT is almost essential for interbank transfer across countries. Of course, SWIFT claims to be neutral international organization, but definitely US has an influence on SWIFT. And that is the reason why China is pushing for the internationalization of renminbi via DCEP, and to form a new currency clearing network. In fact, the criticism that have been moved to SWIFT is that it is an outdated, inefficient, and costly payment system. In fact, since the establishment of SWIFT 46 years ago, the technology has been updated slowly and the efficiency has been relatively slow. So if SWIFT implements new US rules for Hong Kong, there might be a problem. In fact, the Bank of China is considering a run on its Hong Kong branches if clients realize they would run out of US dollars. So some Chinese banks are working to address clients that borrow US currency to purchase aircraft and machinery and to meet other manufacturing needs. So if banks in Hong Kong are suspended from SWIFT's US dollar transaction processing, it would have serious consequences, as the move would seriously disrupt banks' operations and affect local financial markets. So you see that the transaction processing process is very important. And that's where Ripple came in recently, because it is an open source protocol that supports real-time cross-border transactions. It was created by Ripple Labs in 2012 and aims to modernize the work of payments, exchange rates, and replace the SWIFT network. Now, XRP is the native token of the platform and acts as a medium of exchange, representing the transfer of value on the network. But Ripple Labs is a for-profit technology company that was invented and continues to develop the Ripple protocol. So it owns a majority of XRP tokens and has commercial interests, including a potential IPO. And there is also a problem related to some legal proceedings that are against Ripple, and therefore the pending lawsuits present a substantial risk. Tokens were sold in an unregistered securities offering, and if the SEC designates XRP as a security, its utility as a medium of exchange will disappear. So there are lots of issues at stake. When John was talking about the system being developed in Singapore, it's very interesting, and the aim, I believe, is also to act as a sort of a system for cross-border central banks payments. That is very important issues because there are some other private companies that are doing that. We have to see in an organized way and in international regulation that sort of sets the standards, the general standards for this to happen.
Thank you very much. I think that sets a very good point. International collaboration is going to be very important. Central bank digital currencies, there will be the retail versions, but there will also be cross-border movements. It will be to be seen whether you will have a replacement of SWIFT as a mechanism, or will be an upgrade of SWIFT in a different format, or will private bodies like Ripple have an impact in terms of cross-border nature of things. Payments will remain an important element of what we do. So thank you once again to everybody on the panel for their wonderful insights. Has been very interesting. We could speak for hours on this topic, and as with everybody being very interested in this, right? Policy 4.0 is going to be releasing a very interesting report in a couple of weeks' time. So do go over to their website and check out what they're doing. Thank you so much to the panelists, and we look forward to continue our discussion offline. Thank you.